Hi traders and welcome to the Technical Analysis Market Watch on Friday the 20th of February. So I've seen a week of consolidation around some very key levels on all of the majors that we talk about each week. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. Alright, so we'll start out here with the Aussie USD, and we can see that we've seen quite a nice pullback actually to the 20 moving average that goes all the way up. We saw the high, low sequence obviously, and now we've spent the last week and a half coming back down and touching the 20 moving average, which is really exactly where you want it to be prior to the next move, because we've got two options now. It can either break through on a daily chart and pass the 20 moving average, at which point we can start looking at selling opportunities down to around that 69.20 to 30 area, or we can get the rollover here, which is what really ideally we want, and we see a series of higher highs and higher lows on a smaller time frame. And at that point, we'll be looking for that previous high again around that 71.40 to 71.50 area. Really strong opportunity, because this is what it's been doing all along, all the way up. We can see we've been hitting the 20 moving average, pulling back and then taking off. So this is a line in the sand moment for it in terms of which direction it goes. The preferred direction is definitely long. We want that continuation to go, because we want to trade in the direction of the trend. So really, if we get that 15-minute or 1 hour change of trend where we start to see a series of higher highs and higher lows, I think it gives us a good opportunity to get that 90 to 100 pips that we can see on offer. And the take profit would be looking around that level here, around the previous high. So that's what we're going for in the first instance. A break below the 20 moving average on a daily chart, and that changes it altogether. Then we're looking at move back effectively down to around that 69.20 to 69.30 area. So we want to be avoiding that really, because that'll break the momentum, but we trade what we see. And if that's what happens, then we'll look for those lower high time frame, lower highs and lower lows to actually try and achieve that level there. We'll go over to the dollar index, which is obviously a really strong move this week. We can see a break of the 20 moving average. It did attempt to go down after it though. We can see we had a very big wick on that day. Then it pulled back down underneath the 20 moving average, but strength prevailed. And it's very important for it, because it reached a key level. It reached that level of 98, which we know is very strong resistance here. There's no question about that. So while we've got support in this area here, resistance there, and a whole manner of support and resistance right through here, especially support, more support than resistance, we would expect it's going to be quite a boundary to get through. But if it does get through it, and we're all of a sudden trading at 98.20 and all of that noise is cleared, it really opens up a decent amount of potential to get to around that 99.50 to 80 area in the first two moves, and then up to the 100.50, which is really the next real key zone. You can see still a bit away, but this is the area that we're talking about, these previous highs here. That's where the potential is, and of course that means that we're going to see, if that happens, we're going to see a significant shorting on the euro trade, but that doesn't really matter, because this is really guiding us through where the euro goes, because it makes such a big part of it. So ideally, the US dollar is the one that I prefer to follow for that move on the euro, and right now it's got resistance in its face. There's no question about that, and that resistance is coming from that support that I explained earlier. So it's a role reversal zone, but that makes it more significant if it breaks through. Okay, so if it does break through this area and we see the 98.20 on a daily, that gives us even more confidence that it can continue on, because there's not a lot in front of it all the way to around that 99.80 to 100, and then another 50 after that. So really good opportunities coming up. Very good trading for the week, but a very key level. So just keep an eye on it, and don't go jumping on until it actually breaks past this level, because there is quite a bit of resistance there. If it rolls over again and starts to lower high, lower low, the 20 moving average would be the target I'd be going for in that instance. That would be the straightforward trade. All right, we'll move over to the US 500. So we've seen a very stagnant week here in terms of trading. Obviously, we've got our two boundaries set up at around that 67.50 and that 69. There's a big 150 point range there, but we certainly did maintain it inside. The trading was all maintained inside that boundary this week. The first part of the week was obviously a holiday too, so we're going to be mindful of that. But look, you can see the spiking candles, long range candles on either side with very indecision closes on the opens and the closes each day for the first 3 days. You can see they're very small bodies, but with reasonable size wicks. But then we've got a couple of attempts that have tried to push up to the upper boundary, hit the 20 moving average there as well, which is starting to roll over a little bit, and effectively came back and finished effectively where it started. If you put a line where the majority of these candles actually closed, it's going to be within a handful of very small pips. So it's certainly stuck in a little bit of a zone inside this channel. I think that there's still a lot of uncertainty in terms of where the US 500 is going. I think we've got, opportunities on the way up and the way down. Preferably a pullback would be more beneficial in terms of length of trade. I think we can get more out of that trade if we do start to push down past this 67.50. But in the first instance, if you want to trade it, I would be looking for changes of trend inside the smaller time frame. So if you see a series of lower highs and lower lows, I'd be aiming to the bottom boundary of 67.50. And of course, on the flip side, if you see series of higher highs and higher lows in the smaller time frames, I'd be trying to trade it up to that 6900 and maybe 69.20. But just be mindful that the 20 moving average is there, along with a resistance line that's held up quite strongly as well. So either of those boundaries are more than likely going to cause some sort of problem for you if we don't get a really big strong momentum break. And until we get a strong momentum break, I would only be trading inside those two zones. All right, move over to the shiny metal now. We'll go over to gold, and look, it's doing its very, very best to get above this 20 moving average again. It tried to go higher early in the week, failed, and pulled back onto around the 48 sort of 70 to 80 area zone. Bit of a problem for it here in terms of it's trying to get past the 20 moving average and has failed twice. And that was a decent candle too. The one that the previous candle attempted to, it was nearly a full range candle the previous day, attempted to get over the 20, didn't do it. Today's trading has attempted to do it again and is closing underneath it. It's extraordinarily important for gold to get above that 20 moving average. Once it gets above there, we can start looking at it with a little bit more confidence that the strength may return. You're going to find potential resistance of 5100. That would be the first area that I'd be taking profit if I was scalping it. But certainly in the first instance, I'd want to get it past that 20 moving average. So it needs to be trading above, 50.20 probably would be enough to get it past it on a daily. And then that opens up $80 up to about the 5100, where I would be looking at scalping opportunities to get out on this one. It's good. Look, it's good potentially to 5400 if we get a break past this zone, but I wouldn't be looking at trades that are going to go past this first little middle area because that's where the real problems are. That's where the congestion is. So I'd be looking at it at two paths. I'd be looking at it getting past the 20 moving average first and getting it up to that 5100, and then looking at that at a different trade. If it continues on and breaks past 5100, I'd be looking on board and getting on that as a separate trade up to 54. That would be the target. But if it rolls over here and fails to get past the 20 moving average and starts to push down, the first real resistance you're going to get in the form of support is going to be that 48.50 area, which is the bottom of these two zones. So just be mindful of that in terms of where it's stuck. So just trade in between these two bodies for now on the scalp until we get a clear definitive break on a daily chart. All right, and we'll go to Bitcoin to wind it up. Look, this has been one that's been really, really soft this week. It's been gradually moving down to a level where we know it's a line in the sand moment for it. That sort of 63, 64 level, this whole zone here between 63.5 and 64 and or 64.9 to 65, very, very big support here for it. You've got to go out a long way to see that support, obviously, because this has been here for a long time, but you've got very heavy resistance at that level, and it came back and tested it before it started its big run. So if you go right out, you'll know why this area is important, and no doubt it has to be respected, even though it was a long, long time ago. I would be looking for a change of trend over the 20 moving average before I look at longing this. If we see a series of higher highs and higher lows on a bigger time frame like the daily or a 4 hour, and it's trading above the 20 moving average on the daily, which is obviously very important, then I would be looking at longer opportunities back up to probably firstly around that sort of 77, 78 area where we know we've got some form of resistance, and after that the 83 to 84 again. They would be the upside targets if we get the higher low above the 20. So still looks like a long, long way away from doing that. And if we don't, and all of a sudden it's trading underneath 62,000 and closing on the dailies under 62, especially if it's closing underneath these wicks here, that's really going to probably open it up to a potential move down underneath 55,000. So I'd want to be watching this area with a lot of interest. I'd be setting a line here at 63.2 and 71 as the high, trading inside that zone with smaller time frames, and then when we get a daily break on either side of those, we look for those bigger targets that we just mentioned. So I hope you've had a great week's trading. We've seen some pretty good opportunities, although not really big, long moves. They have been playing the game inside the right channel. So hopefully you're able to take advantage of some of those. Have a fantastic weekend. I look forward to seeing you all next week.